Picture this, 2018, a year bustling with technological advancements and global connectivity. People are glued to their smartphones and the world seems smaller than ever. Global trade is running smoothly, connecting countries and products in a vast web. Cargo ships crisscross the oceans, ensuring that goods reach every corner of the globe. You buy a car, its parts come from everywhere. From the engine to the tires, each component has a story of its own, traveling thousands of miles before reaching the assembly line. Even your soda can's aluminum has traveled the world. It's a testament to the intricate dance of international trade, where raw materials are sourced from one continent and transformed on another. This system, built on decades of agreements, keeps the global economy moving. It's a delicate balance maintained by countless negotiations and treaties. Then, the US government throws a wrench into the works. A decision that would ripple across the world, altering the course of trade as we knew it. The Trump administration announces a 10% tariff on all aluminum imports, a tax on anything coming into the country. This move was more than just a policy change, it was a statement. Suddenly, selling aluminum to the US costs more. Exporters face new challenges, and the ripple effects were felt far and wide. This wasn't a minor tweak, it was a disruptive move that sent shockwaves through global markets. Investors scrambled to adjust, and uncertainty loomed large. Aluminum is everywhere: phones, cars, planes, even your kitchen foil. Its ubiquity meant that the tariff's impact would be felt in everyday life. When the world's largest economy changes the rules, everyone notices. The reverberations were immediate, with analysts and business leaders trying to make sense of the new landscape. Financial markets wobbled, business leaders panicked, and politicians drafted angry letters. The air was thick with tension as everyone braced for what was to come. The era of predictable trade was over, uncertainty had arrived. Delays became common, and the once smooth flow of goods was now a tangled mess. This wasn't just policy, it would affect millions. Canadian smelter workers, Ohio manufacturers, and you at the grocery store. Prices fluctuated, and the impact was personal. The global trade system was about to be tested. Would it withstand the pressure, or crumble under the weight of new challenges? The US made its move, a bold step that would redefine relationships and strategies across the globe. Now, the world had to respond. Countries scrambled to protect their interests, and the game of international trade became more complex. The reactions would be just as dramatic as the action. Protests erupted, and the media buzzed with speculation and analysis. The stakes? The future of global trade. Economists debated the long-term effects, while businesses prepared for an uncertain future. Would the system hold, or would it unravel? The question loomed large, with no easy answers in sight. The answer would shape economies, jobs, and prices everywhere. The world was watching, waiting to see how this chapter in trade history would unfold. And the story was just beginning. A new era of trade was dawning, and its impact would be felt for years to come. Why would a country impose a tariff on a metal that its own industries depend on so heavily? Aluminum is everywhere, in cars, planes, even soda cans. It's a backbone of modern manufacturing, and the US needs a lot of it. The official answer? National security. It's a phrase that carries weight, conjuring images of military strength and self-reliance. Under Section 232, the US government argued that a robust domestic aluminum industry was essential for defense. Think fighter jets, armored vehicles, and all kinds of military hardware. Without a steady supply, national defense could be at risk. The logic went like this. American producers were struggling, squeezed by a flood of cheap imports. The tariff, they said, would give them a fighting chance to recover and compete. By making foreign aluminum more expensive, US companies would be encouraged to buy American. That, in turn, would create jobs, boost local economies, and ensure a reliable supply chain for the military and other critical industries. The move was wrapped in patriotism, protecting American jobs, supporting local workers, and defending the nation's security interests. This justification allowed the administration to sidestep normal trade rules, invoking the World Trade Organization's national security exception, a rarely used and highly debated loophole. The message was clear. This wasn't just about trade policy, it was about survival, about keeping the country safe and strong in uncertain times. The move was bold, controversial, and instantly set the stage for a heated global debate. Was this a necessary step or an overreach? Allies and adversaries alike raised eyebrows, questioning whether the national security claim was genuine or just a convenient excuse. Was this really about protecting the nation, Or was it just old-fashioned protectionism dressed up in new clothes? The world was about to find out as the ripple effects spread through global markets and supply chains. And the consequences, intended or not, would be far-reaching, touching industries, workers, and economies around the globe. Critics quickly challenged the national security argument. The US military only needed about 3% of domestic aluminum production, already more than covered. The main supplier? Canada, hardly a threat. Calling Canadian aluminum a security risk sounded absurd. The real issue, US producers faced high energy costs, not just foreign competition. The tariff looked more like protectionism than defense. Economists warned this set a dangerous precedent. Any country could now claim national security to justify tariffs. What if China called US soybeans a security risk? Or Europe targeted American tech? The global trade system, built on rules, suddenly looked fragile. The move risked opening a Pandora's box of retaliatory tariffs. The world watched as the system was tested. Would order hold, or would chaos spread? The stakes were higher than anyone expected, and the controversy was just beginning. For Canada, the sudden imposition of tariffs was nothing short of a shock. The news rippled through factories and boardrooms, leaving workers and executives alike stunned and uncertain about the future. For decades, Canadian smelters, powered by abundant and cheap hydroelectricity, had been a reliable backbone for US manufacturing. Their aluminum crossed the border daily, fueling American industries and supporting jobs on both sides. But overnight, these trusted suppliers were suddenly labeled a security threat. The very metal that had helped build American infrastructure was now seen as a risk. Canadian leaders were both baffled and outraged. After all, Canadian aluminum had long been used to build American military vehicles, and the two countries were close defense partners, sharing not just borders, but also security commitments. The economic impact was immediate and severe. Canadian producers suddenly faced higher costs and uncertainty in their largest export market, threatening their bottom lines and putting jobs at risk. Business leaders were left with a tough choice. Should they absorb the financial loss themselves, or pass the extra costs onto their American customers, risking sales and relationships? The stakes were enormous. Jobs, livelihoods, and billions of dollars in cross-border trade hung in the balance, as uncertainty spread through factories and shipping ports. But Canada didn't just sit back and accept the blow. In response, they hit back with their own tariffs on iconic US goods like steel, whiskey, and even ketchup, sending a clear message. The message was unmistakable: hurt us, and we'll hurt you back. The era of easy cooperation was over, replaced by tension and retaliation. The once friendly North American market quickly turned into a battleground, with barriers and suspicion replacing open borders and trust. Tariffs and counter-tariffs now defined the relationship, as cooperation gave way to confrontation and uncertainty. The damage to the relationship was real. Trust, built over decades, was suddenly hard to rebuild, and negotiations grew tense and unproductive. The fallout rippled through small towns and entire industries, leaving communities struggling to adapt to the new reality. For many families and businesses, the cost of conflict wasn't just a headline, it was a daily struggle, with bills piling up and uncertainty looming. And so, the trade war was on, reshaping the economic landscape and testing the resilience of a partnership once thought unbreakable. Canadian aluminum producers had to adapt fast. With the US market less profitable, they looked to Europe. Redirecting massive shipments meant new contracts, logistics, and relationships. European manufacturers, especially in cars and planes, valued Canadian aluminum, clean, hydro-powered, and low-carbon. Green aluminum became a selling point. This wasn't just a quick fix, it was a long-term shift. Canadian companies invested in Europe, signing long-term deals and adapting to new demands. Ironically, the US tariff pushed Canada to diversify away from its closest ally. The policy backfired, strengthening Canada's ties with Europe. The global flow of aluminum changed for good. The US aimed to reduce reliance on foreign metal, but ended up losing influence. Trade routes were redrawn, and the world adjusted. Europe soon faced a new problem: a flood of aluminum. Canadian, Russian, and Middle Eastern producers, shut out of the US, sent their metal to Europe. Prices dropped, hurting European smelters. Domestic producers complained, warning of job losses and unfair competition. The EU responded: safeguard investigations, quotas, and new tariffs. If imports exceeded limits, tariffs kicked in. Europe built its own wall to stop the flood. The chain reaction was clear. US tariffs led to Canadian exports to Europe, which led to European barriers. The global market fractured into protected blocks. Instead of fewer barriers, the world got more. One country's protectionism triggered a global wave. The lesson: in a connected world, every action has consequences, and everyone pays the price. Did the tariff revive the US aluminum industry? Not really. A few smelters restarted, a few hundred jobs returned, but the cost was huge. Aluminum prices rose for everyone. Domestic producers, shielded from competition, raised prices. Every US company using aluminum, cars, planes, cans, paid more. Downstream industries suffered: higher costs, lower profits, lost competitiveness. Some absorbed the hit, others passed it to customers. Prices for beer, cars, and construction all crept up. Consumers paid the price. Economists found the cost per job saved was astronomical. The policy hurt more than it helped. The American dream came with a higher price tag, and the benefits were hard to find. The tariff didn't just raise prices, it broke supply chains. Manufacturers scrambled to adapt, stick with foreign suppliers and pay more, or switch to US sources that might not fit their needs. Some even considered moving operations abroad. Small businesses were hit hardest. Changing suppliers could take months or years. For many, the tariff was a tax on survival. Real-world impacts followed. A Missouri nail company laid off workers, beer and soda companies faced millions in extra costs. The beverage industry, supporting millions of jobs, fought back. The result? Higher prices for consumers, lost jobs, and industry turmoil. A policy meant to help a few smelters hurt entire sectors. The economy's interconnectedness was exposed, and the cost was felt in every can of soda. What's the lesson from the aluminum tariff saga? In a global economy, simple fixes create complex problems. Protecting a few jobs can cost many more and raise prices for all. The US and Canada weren't just competitors, they were partners. The tariff hurt both sides, disrupting efficient systems and making consumers pay. Using national security as an excuse weakened global trade rules. When big players ignore the rules, everyone suffers. Restoring trust takes years, the damage lingers. The story is a cautionary tale. Protectionism's costs ripple far and wide, and it's a lesson we keep having to learn.